Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, December 2, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, we have much of the same routine that we had over the last several days during the Thanksgiving Day holiday light volume floater type week situation. Looks like we had a Monday type hangover or holiday hangover, as they call it in the trading parlance. She's riding the trend line. We're talking about this upsloping trend line. She's been riding the trend line over the last few days. Whether or not she hits it as a bullseye each and every day, from a daily chart perspective, when you pan out and just take this thing at face value, you would say, hey, look, she's riding the trend line. When you get down to the granular, to the penny intraday, did she hit the trend line today? No, not so much. From a daily chart perspective, she's riding the trend line, give or take. Mrs. Market continues to make new highs. She made new highs last week. She made new highs again today. In addition to the trend line, inside the number members and live room members will have the support and resistance numbers first thing in the morning, not only on the SPY, but all the variety of markets we cover. The Russell 2000, the Qs, the semis, the bonds, the whole 9 yards. Now that we've entered into December, let's discuss a little bit about December. Thanksgiving through New Year's, you got this holiday time, things slow down. The market tends to go in floatum mode. They start talking about a Christmas rally. Nobody really understands what the Christmas rally is. Any rally in December, they attribute it to the Christmas rally. So they'll throw everything they can to continue the bull discussion and price marching higher. Can they have a sell-off in December? Of course, anything's possible. Right now, we'll take the market at face value. There's no material change on the daily chart. She's floating up at new highs. When you look at the weekly chart, at new highs, above all the moving averages, the trend is your friend until further notice. Traders that are taking the master class will notice something about the moving averages that we discussed in the master class. It's a little lesson in how to read moving averages. Little bit far extended from home base on the weekly chart. Home base is the 20-week moving average, but she can stay extended. She just can't really get too far, but the 20 is on the rise, which is a bullish situation. And as you can see, the moving averages are sloping upward, and the trend line going from bottom left to upper right is sloping upward, and the trend line has a rising price situation. So for example, tomorrow the trend line's at around 606, 605 and change, maybe 605, 85, 90, 606, something in that neighborhood. There's also a variance, trader term, a variance intraday. It's an upsloping trend line. Write that down. Put it on a sticky note. How about the Lazy Swing Trader Automagical Algos system? It's an alert system where the system gives members alerts where a long side or short side trade exists right off a watch list that the members already have access to long before the alert comes. 131.15 was the recent buy in Lumina. It was purchased on the 18th of November, and here we are on the 2nd of December, up roughly 14, 15 bucks. How you doing? In the current math, that's about 10.67 if you're reading the list. That's percentage up from entry. How about AMAT? Where do we buy AMAT? How about 168.18? On the 15th of November, basically the recent bottom. Funny how that works. AMAT. There's one more. How about JD.com, up about 12% from entry. Entry was 33.40. 3 examples from the lazy swing trader automagical algo system. What about inside the numbers? What are those folks getting first thing in the morning at 0 dark 30? We're getting a welcome back from the holiday weekend. We have an early pivot, which did not get visited today. We had other numbers on the board that did get visited today. The flip side situation, for example, I'm going to highlight a few important things throughout the notes. What I urge you to do is pause the video and go back to the charts to double check the work. This morning, we were talking about 602.45. So if as long as they're above the pivot, which was down at 601.40, they would run up to 602.45 and higher. Now, a resistance number or support number is really an important number. So if price is above a resistance number, it then becomes support. If price is below a support number, it then becomes resistance. So what happens when she gets above 602.45 and higher, the entire part is around 603.35. That was Friday's high. Okay, fair enough. Let's focus on 602.45 for a second. It's an important number, and it became support when price was above. Price opened the day above, and it became support. Remember, what I urge you to do is pause the video, read the notes, go back to the chart, and double check the work. What's the scoop today? Right around 9 o'clock in the morning, a little after. If above 602.45, which they were, they would go first to Friday's high and then the trend line. So they did go to Friday's high at 603.35, but they did not get to the trend line. So they accomplished one of the bull goals. They weren't able to stay above early in the day long enough, 603.35, to make another run. And then later in the day, they made another attempt. Pause the video, read the notes, go back to the chart and double check the work. All the numbers you need are in here in order to be successful trading in the S&P or any other vehicle that tracks the S&P, SPY, options on SPY, the ES, the MES, exchange traded products. It doesn't make any difference. They are directional trades. Here's a list of the markets that we cover, from the S&P to the Qs, the IWM, all the way down to natural gas, the dollar, Bitcoin against the US dollar, silver, gold, crude oil, GDX, TLT, smash mouth, as I like to call it, which is the Philadelphia Semiconductor Index, SMH. Pause the video. Look at the charts. Double check the work. I'll do an example for you. If you just take a couple of the numbers from Camp IWM today, you'll notice that 241.85 was on the board, as was 240.55 down here and right here. The reason I bring this up is because we had several traders in the live room in on the long side at 240.55 for a really, really nice pop for a buck right out of the chute. Made nice profits early in the day, early in the week. In Camp IWM. What do we have going in Camp IWM from a bigger picture perspective, the daily chart perspective? She's eating time off the clock, allowing the 20-period moving average or home base to creep up toward price, and that's a corrective pattern in and of itself. You can look at it another way and say, hey, look, you can make a case that you've got a bullish, flaggish situation going on up here, and there's your flagpole coming off from the lows. So you have a bullish, flaggish situation. Also at the same time, creating a corrective situation, eating time off the clock, allowing home base to creep up toward price. So those two things are bullish in nature. And as long as she's above all the moving averages and the moving averages are creeping up in price, she's in a bullish position. This is the former high. Tested the former high last week, but eating time off the clock beneath the former high. And when we say former high, if you reel back the tape or the time, if you will, the former high is right here at 244.46. That is, in fact, The blue line, that's what it's there for. So we have our point of reference. By the end of the day today, the IWM was down 12 cents. It's a rounding error, 1/2 of 1/10 of 1%. It's a rounding error. Against the SPY, which was up almost 0.2 of 1%, it's not enough difference to say it's a leading indicator of the downside, meaning the IWM. It's my favorite market leading indicator, but the divergence that exists today between the S&P and the IWM isn't wide enough to make really a federal case out of it. We're going to take the IWM at face value and call her bullish until something changes. Where does something change? What's the first clue that something changes? They come down here and they fill this gap and they get below the gap and they start closing daily below the gap. That's step one. That's the first order of business in a change in character from the bullish flaggish situation. Write that down, put it on a sticky note. What about the folks down at the transportation department? What's going on over there? Well, it's a bullish, pullbackish, flaggish, wedgish kind of situation-ish, testing the most recent breakup candle low above all the moving averages. The trend is certainly your friend. The most recent breakup candle low is right here. Ran a test of that today, bounced off of it, and this could be considered a bullish, flaggish situation, very similar to Camp IWM. You have a flagpole down here, you take this out, you ignore it, and you say, what is that? I can certainly make a case. That's a bullish, flaggish situation above all the moving averages. How does that change? You get below and you close below, close daily below the low of this breakup candle. That would be the first order of business for any bear case. And then closing below the gap down below would be the second order of business. And by the time that would happen, you would likely be flirting with and or below home base or the 20-period moving average. How do you like dem apples? So my second favorite market leading indicator was in fact down 0.4 of 1% today, a number one canary in the coal mine. However, but wait, there's more. We're going to leave this chart with the trend is your friend, and we're going to go to the Qs, which was up 1% today, $5.50, playing a little catch-up situation up to these former highs that they were in jeopardy of making a lower high and going lower, but that one is basically wiped off the board as they're testing the former highs already. I believe they made a new high. Today's high was 516.26, and the former high was in fact lower than that. New highs in the Qs. The trend is your friend until it's over. Where have you heard that before? What about the financial space? Down 50 cents, about 1% in the XLF. While we're not going to make a federal case out of it, we will make it of note puzzle piece on the table. There was a pickup in volume, and if she starts to crack below home base, we're going to call that interesting information. If the financials are fine, it's unlikely there's any issues widespread in the market. However, if there's cracks in the financial space, there are other cracks coming in the market as a whole. We do use the financials as an important piece of information. We go to the weekly chart and we say, well, we started a new week, 50 cents down or 1%. Look where they are on the weekly chart from a, hey, are you getting too far from home base perspective? And the answer is, yeah, she got a little bit far extended from home base. It's not uncommon for them to want to go sideways for a while, let home base creep up to price. We're looking at a weekly chart, so these things can take time. Putting everything in perspective, one chart at a time. $50, give or take, is a psychological place. Get below, close below, stay below $50. Won't be good for the bull case. $50 is an important number. Write that down. Put it on a sticky note. What about smash mouth, the Philadelphia semiconductor space? We have what's called a snapback situation on our hands. A couple of trading days ago, she made a low. Up day on Friday. We had follow through today, right back up into these moving averages. Convergence basically of a 20 and a 50 period moving average. Get above those moving averages and the trend will turn back to bullish, and we will no longer make any assumption that this price up here will fail on another retest. Tested once, failed, tested again. We're not going to count on a retest failure situation. Weekly chart, riding the 20 period moving average above all the moving averages, and the trend is in fact your friend. You could look at it like this. Here's a high. You could say, is she putting in a lower high and potentially rolling over? That is one scenario where the umpire calling balls and strikes. Or is this a bullish kind of pullback-ish situation, flag-ish situation, building energy to run a test of the former highs? We don't know the answer. We must be aware of all scenarios available to us on the chart. And while she's above all the moving averages, the trend is your friend until proven otherwise. Therefore, for now, above all the moving averages, she's bullish. Above 258, she gets more bullish. Write that down, put it on a sticky note. Have I told you how much I appreciate each and every one of you? Without you, these videos, they're not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.